Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. Hey, everybody, welcome to Patterns and Profits. I'm Tom Gentile. You know me, America's #1 pattern trader, here to help you find patterns that repeat and profits that add up. Again, I'll say it again. Hey, help me out here. Subscribe to the channel. Hit the notification bell if you want all these videos when they are uploaded. And one more thing that I got to say, this is not investment advice. Past performance is not indicative of future results. All right. So that being said, let's go ahead and get started. As you can see, I got three things I want to cover today. I want to talk about Money Counter. It's a brand new month. It's also a brand new Monday. So we'll be doing Money Counter monthly and Monday here to start the program off. I want to do an update. So last week I did a video on SpaceX and the IPO, but I want to do some updates to that. I want to talk about what happened to Blue Origin this before the weekend, and also some updates that we found. Want to do a little bit of a deeper dive into something I'm planning on doing once the IPO comes out. And then finally, and I'm going to sprinkle this in here somewhere, I got two new summer alert services coming, all right, that I'm adding to my alert services. One is a trend alert service, and one is an earnings alert service. I'll talk a little bit more about those somewhere in the program as well. So there we go. If you have comments on anything we're discussing as we go through this live stream together, then feel free to put your comments in the section below. And so, let me show you that it actually works. Here we go. Morning, everyone. Good afternoon in sunny Florida. It is afternoon in sunny Florida. It's a little overcast over in the part of the state that I live in. But anyway, good morning. Good morning. And so glad to see all of you joining us here. We're very excited to be back again. I took last Monday off, like many of you. I spent some time out on the water, had a good time, but hey, we're back and we're ready to get going. So let's go ahead and get this thing started. All right, so we're in the month of June, brand new month. Brand new monthly money calendar as I'm looking at seasonal trading. This is what the calendar looks like as we head into June 2026. What am I staring at here? All right, so this is a calendar of the top 1%, 1/2% of all stocks out there, top 10% of optional stocks. And what we do is we take the stocks that have the most liquidity. We take the stocks that have options with them as well. Because if a stock has options, then it has hit a certain hurdle of liquidity to be optionable. But that's not just the only thing we do. We take the top 10% of all optional stocks, around 350, 355 of them, ETFs included, and they go on this calendar. All right. What do I have on this calendar? Stocks and ETFs that are optionable that have at least 10 years. All right. I need 10 years of data. Now, I'll take the data and I'll look at it 5 years from, last 5 years, last 7 years, last 10 years, last 20 years. And I'm mixing all of that up to find, well, I'm looking for seasonal patterns. I'm looking for seasonal patterns over those timeframes. When you look at the overall calendar, this is all of the stocks that we have that I'm throwing in the mix, and a good bit of them are pushing bullishness as we head into June. 99% of everything I'm looking at seasonally, all right, seasonally is giving me bullish opportunities as of today. Now, look behind me. You see all that mess back there? All right, it's a mixed day today. I'm not looking at what's happening today only. I'm not looking at what's happening over the course of this week. I'm looking at the stuff you see on my calendar is an average of around 30 to 60 days from now. All right. Not 30 to 60 minutes from now. Not a day trader. Right. I'm not specializing in stocks that the meme traders are interested in. Not a meme trader either. Right. I'm a rules-based pattern trader. And what we're looking at is rules-based patterns that go back for months in some cases. All right. So when I look at the overall calendar here, immediately I'm seeing that there's a lot of bullishness on the screen. Is there anything out there that's bearish? Well, I jumped into the calendar and I'm looking at gold and silver. When I strip away everything, I look at gold and silver. I'm seeing a lot of gold and silver ETFs that, yeah, they kind of start out bullish, but by the time we get to the middle of the month, I start seeing some red on the screen. I start seeing some yellow on the screen. It's telling me that we're seeing mixed areas in the gold and silver areas. And by the way, this also extends into cryptos and commodities, right? So the commodity section, precious metals, industrial metals, now start to fall off of the bullish track that they've been on for the last couple months. And in fact, with the case of oil will completely come off the bullish sector here within the next 30 days. So I'll be looking at potentially bearish opportunities in oil, and not just because of what's going on in the Middle East. So other than that, that's what my calendar looks like going into June. I'm going to lean into some bulls, and we'll start with the bulls that we see this week. So when we go into the seasonality for June and we look at the ETFs only, again, even with the ETFs, I'm seeing us going from the high 70s to the high 80s in terms of number of ETFs that are bullish versus number of ETFs that are bearish. If I take a look at those ETFs, bring in the top three, here's what it looks like. I've got QQQ sitting out there at number one, right? A lot of trading opportunities. That means that when I'm looking at total trades, I'm looking at trades that are seasonal. Last week, this week, next week. And there's a lot of lumping and clumping. That is very, very good. We're seeing 59-day opportunities going into today that have had an average return of over 7.7% from today through August, around the middle to the end of August. Same holds true for DIA, right? And then, of course, XLK rounds out the top ETFs that we see. That one actually has a better than 8% move during its tenure, which takes it between now and the end of August as well. And I could go into all kinds of details and spend tons of time looking at every single one of these, but I ask you to go out. Look at QQQ. Look at DIA. Look at XLK, all right? Take a look at those and see what they did last summer. See what they did in 2024, and 23, and 22, and 21, and look at the last 10 years of what these ETFs have done during the summertime. One of the reasons that I believe that summers are so good and have been so good to the stock market, and I'm not guaranteeing they're going to continue to be good, but one of the reasons I believe they're so good is because we're out of earnings for at least a month, right? We won't start hearing about earnings again until after the 4th of July for the majority of stocks. So we got a good month where no news is good news. Now, what could rock the markets right now? Because, I'm not going to be just complacent. I don't want to get comfortable because we keep seeing higher highs. In fact, we're getting a little bit of a pullback today. But I also don't want to run and hide and put my head in the sand, just because I see a little bit of volatility on the board behind me. I need to remember that it's not about today. It's not about this week. It's about patterns that are several weeks into the future and have had, even though, like I said before, I'll say again, no guarantees, but we look for these patterns to hold up over time. And that's what they've been doing. So while I'm not going to be comfortable, at the same time, I'll show you how not to be comfortable and still trade these seasonal trends that we see here. All right. So if we were to look at charts, I could look at charts of each. Let's start with the Qs. So popping on in here, let me open up my chart, expand it a bit. Let's go into QQQ first. QQQ, DIA, XLK. Here's the Qs first. As you can see, that big bump off those April lows that we saw going on. And I mean, I don't want to say it's a straight line up, but this is as straight line as I've seen. If we look at channels, I mean, there's a number of things we could look at here, but you've got channels that just continue to move on and on, right? That's the Qs. Lows down here in the 550s. Highs, we're just coming off of 740 as of Friday. A little bit of a pullback coming into today, but then it's all about, well, where does it go from here? And, if you were to try to stay on some sort of a track, not saying it would, but if we stay on some sort of a track going into August, this puts us up or above 800 by the time we get into August. Now, let's just take a step back and again, look at the information that I just shared with you, 7%, all right, coming off of today. So if we take 7% of, let's call it 736, all right, well, 10% puts us close to 800. 7% probably puts us around the 780 mark. So we could use 780 as a target for QQQ, right? Let's take a look at DIA real quick. You can see with DIA, Dow Jones Industrial Average, same thing, April lows down here around the just above 450. Current highs above 510. Remember, the DIA trades at 1/100th of the Dow Jones Industrial Average. And if we're looking for, let's call it 7%-ish, that probably would put us somewhere around just below 550 for a target by the time we get into August. And then the last one of the three we were looking at on the board was XLK. So here's XLK. XLK is the Street Track Select Technology sector. Lows below 130, highs at 192. This one we were looking at a projection of 8%. And again, that puts us well in the two. If you take a look at 10% of 200 is going to be 20. Let's say 8% puts that around 15. From 192, that puts us around, let's call it 210 as far as a projection going out into the summer as well. So that's our big three when we're looking at QQQ, DIA, and XLK. All right, so if I spotlight these and we take a look at these, for those of you that are ETF novices, right? The QQQ, or the Qs as we call it, it tracks the NASDAQ 100. This is large cap tech and growth companies. DIA, Dow Jones Industrial, we know what that is. We also refer to that as the diamonds. That is tracking the Dow Jones 30. XLK is, if you take a look at the tech stocks within the S&P 500, that's where XLK comes from. Now, let's do a little deeper dive and let's talk about options for a moment. So if I were to deep dive into the options, let's take a look at Qs. So I'm going to pop back over to the Qs, and I have set up already an idea on what we can do with those options. And they look something like this. Here's our Qs. Here's April. Here we are today. These are the options around the Qs. Calls on the left, puts on the right. And if I were to expand this a bit, kind of show you where we are, if we're trading right between the 735, 740 area, that would be where you see that little bit of shading. That shows us that the stock price or the price of the ETF is trading between these two options. These are the near money options, near money calls, near money puts. And what am I looking at here? I'm looking at August 21st, 2026, because that is the expiration date that is closest to the end date on the seasonal patterns, right? That's what this shows me. So immediately, if I'm looking at this and I'm saying to myself, well, what was my pattern again? What was that 7%? Where did that take us? 780. So if I use 780 as a target. 780 as a target. I mean, if I'm looking at where that's like, where we're likely to go. Well, 780, that shows a bid of 1528 and an offer of 1541. The last thing I want to do is go out and buy a cheaper out of the money call option, especially at my target price, because the worst thing that can happen, the worst thing that can happen is not losing money. The worst thing that can happen is losing money and seeing the cues, seeing the underlying go in your direction. Okay. I'm okay with losses. Losses are part of what we do here. Losses will happen, but I don't want to see a loss because I made a mistake in choosing the wrong strike price, because I made a mistake buying junk. I sell junk. All right. I sell junk to those that want to buy it. And that's what I'm looking at doing is, why don't we sell this junk? Why don't we sell the 780? And maybe we drop down and we buy something like the 770, right? So if I sell the 780 and I buy the 770, now I'm putting something together that if we move to 780, I actually can potentially maximize some profit potential, right? What if I were to, and I could widen this out even more. If I wanted to go out and buy instead of the 770s, maybe I buy the 765s and I have myself a wider spread. This is what's called a bull call spread or a call debit spread, where we're buying the lower strike call, selling the higher strike call. So let's talk about how that whole thing gets put together. What I'll look at doing is I'll look at buying, for instance, this is an example. Let's look at buying the 770s. All right. So that's my 18. All right. Or what I'm paying for that. That is an $18.93 or $18.93 for that particular trade. That's going to cost $1,893. But if I go in and I decide I'm going to hedge that by selling right here at the strike, at the area that I want to see as a target, and I want to sell that 780. All right, I sell that 780 put. Now, what have I done? I've bought the lower strike, I've sold the higher strike, and I'm doing that for a combination price. Now, look, $1,900 no more, $358. Now we're in the wheelhouse of spending less. Now we're in the wheelhouse of taking on a seasonal opportunity, but not getting comfortable. Not getting comfortable with the idea that, maybe the market is due for a little bit of a pullback, right? That's how you take advantage of seasonal opportunities and still create an alternative risk plan other than simply going out there and buying the cues because you think they're going higher, or buying the cues because maybe you have a rules-based trading strategy that is telling you that you want to move, you want to get on the long side, right? That's the difference between step one, spotting an opportunity, and step two, creating an alternative risk strategy, just in the event that you might be wrong. Okay, let's look at some details here. So the details I put together are, in this case, looking at being long the 770 call for August for the Qs, being short the 780 call for August with the Qs. That M right there says monthly. That's the third Friday of the month. That's the designation, just in case any of you are curious what that M actually means. 1 means buy, -1 means sell. And then these are the most recent prices, but I can change these to reflect if I actually take this trade and look for a fill on it. Right. So now I know what my cost is going to be on this, what my cost and risk is, what my break even. But let's see what this looks like on a curve. So if I click on risk curve over here to the right-hand side, that's immediately going to pop up and show me what this trade is going to look like in the event that we go up to and above our area of break even. This is a risk graph for the actual call option. Let me blow this up so that everybody can see it. Right, there's my call option risk graph. This is the absolute worst that could happen in terms of loss. From here to here is the difference between the strikes, between the 770 and the 780 strike. And of course, now spreads actually max out in value as you go higher. Now, this is all kind of truncated in this little window. But if I were to take the graph on the left-hand side, move it to the middle and expand it a little bit, move it to the middle expand. And as I expand that, you know what's happening? I'm actually bringing the window over here to the right, the option window, out a little bit. So you can see the 770 strike. You can see the 70-80 strike. You can see everything above and everything below. And then, oh, by the way, these colored lines you see in here, red, blue, green, purple, those are different days to expiration. So you could put together a what if strategy. All right. Well, what if the Qs go to 780 by next week? You're not going to get the maximum return because you got all this time value sitting in over here. Yeah, you'll make a little bit of money, but you're not going to max out and make the potential reward, which is almost twice what the risk is. All right, here's your risk. Here's that break-even area. Here's your reward. Notice the reward is almost double what the risk is here. It's that way because we are out of the money on both the buy side and the sell side. And therefore, you know, when you get a 10-point strike, we're paying $3.58 for the strike to make what? To make over 600, all right, 642 to be exact. So putting all that together, that's how I go through and, you know, take ourselves on a journey where we're looking at not just spotting the opportunity, okay, and not just looking at the Qs or even looking at call options as an example, right? But actually going in and creating those low risk opportunities, all right? Hey, stay tuned. I got a lot more coming your way. I'm back in less than a minute. Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. All right, well, we're back. You know what? I want to tell you guys what's going on over here. There's some emails that went out last week, right? Some emails that went out. I actually did a short little video on this too. But we've got some changes happening over here at Gulfport to our Gulfport Pinnacle program. I want to talk a little bit about what those are because, you know, over the last several years, I've built a collection of services, of trading services designed to, you know, really target different opportunities in different areas in the markets. Some of them focus on seasonals, some on high probability options, some on cryptos and commodities and short-term momentum. And each one of these was created to solve really kind of a different piece of the trading puzzle when it comes to spotting opportunity. Gulfport Pinnacle was created for folks that want the whole thing, want everything that I do in terms of alert services, not just one market or one type of setup, but complete access. And that's every stock pattern from Stock Cycles Weekly to recommendations that I do with cash flow, right, which is my income generator, money counter, which is our seasonal opportunities, cryptos and commodities for digital and hard assets. And there's a benefit to being a Gulfport Pinnacle member. You get access not only to every alert service that I do right now, but it also includes every future alert service that I bring together. And that doesn't change the membership price. And so I want to look at both the present and future services with you real quick to show you what is all about my Pinnacle program, right? So real quick, I have Stock Cycles Trader. This is really kind of an entry into seasonal analysis. What we do is we take a look at the money counter. We look at research patterns. We look at high probability or historical probability opportunities in the marketplace. And we put those out to our members with patterns. We put a handful of patterns out every single week, very similar to a couple of things that I do here, but in much more of a deeper dive. All right, Money Counter Pro is really an expansion of that as we'll go into seasonal opportunities, but we also put out those actual low that low risk, high reward or high probability trading opportunity for you to follow along to see exactly how I'm doing it, right? Historical behavior, seasonal probabilities. Cash flow is a consistent, probably the most consistent income strategy that I've created and built around high probability option trades. There is a proprietary approach I use. I have a particular scan that doesn't involve throwing darts at a wall for high probability opportunities. We've had a better than 90% win rate since I started doing this, now in my 6th year. All right. Since November 2024, 69-3. All right. That's when we took over and started doing this, really kind of taking over doing the publication area direct to our members. Cryptos and commodities was my latest service. We look at Bitcoin, gold, oil, silver, hard and digital assets. We actually have a 90% win rate last year and actually doing very well this year. In fact, we just took our first losses just very recently. All right, but still over 90% win rate. So when you add all of these together, these services we have, in 2025, we had a 77% win rate over 126 trades with 97 winners. This year, we're on track to do better. We've so far closed out 60 trades as of last week, 48 winners, 80% win rate. Here are 2 new publications we're putting out to our Pinnacle members, Quantum Trader and Optimal Trader. All right, this is something that's kind of backed by popular demand. Quantum Trader is a proprietary trend trading system that I have done in the past. We pulled that in the beginning because we wanted to focus on mainly seasonality and high probability, but we are adding that back in. That is a service we're going to be launching in mid-June. And of course, Pinnacle members are getting that as part of the Pinnacle program. Optimal Trader is, we're really capitalizing on the explosive opportunities around earnings. I have a volatility scanning algorithm I use to find these, and we're going in skimming earnings with Optimal Trader, finding patterns where volatility and price repeat themselves over and over again, taking advantage of those patterns and getting out before the crowd gets in. Optimal Trader launches in July, again, at no extra cost to Pinnacle members. Now, adding all of this up, stock cycle, money counter, cash flow, cryptos and commodities, and now quantum and Optimal Trader, this is over $10,000 in publications and alert services that we are doing for a fraction of the price. Those of you already Pinnacle founders, you're not paying anything more. But those of you that want to get in at the founder special, if you want to take advantage of the founder special before the rate increase, then I'm going to put in for you right now, going to pop this in right now, a link, and you can catch that link in the comments section. This is our deadline link. That means that you have a last chance before this goes higher. Check out the links right now. I'm going to throw it in there for all of you, and you can see that. Click on that for more information. You can get all the details on our Gulfport Pinnacle Founders price. All right, let's get into SpaceX. So last week I was talking about SpaceX. I was talking about the fact that last week they were talking about and launched their 12th flight test. Again, successful test as they move forward. And then not long after that, all of the excitement started flowing about the new upcoming IPO. All right. I want to revisit the IPO. I want to talk about more details and share with you kind of how I want to trade this IPO. But let's talk about what happened before the weekend. All right. Before the weekend, Blue Origin went ahead and did a test. They were doing a test fire on the Blue Origin rocket, right? And the New Glenn, and it exploded right on the pad at Cape Canaveral. In fact, I didn't see it, but I was told you could see the light from the other side of the state. I can't confirm that, but that's what I was told. And when you look at all the news out there, I mean, explosion rattles the firm, rattles Amazon, rattles NASA. This definitely put Blue Origin on hold. I imagine they're going to be on hold for a year at least. They've gotten access back to the pad where the explosion happened. There'll be investigations to determine not only how this happened exactly, but how to prevent it in the future. But this is the only pad that they had to launch from. They've got another one they've been working on, but it's going to be a while before they're back on the pad again, launching once again. No casualties that were reported, and they didn't have anything significant in the rocket ship. It was more of a test. So where I look is, I look at it a couple different ways. Thank God nobody got hurt. Thank God there were no casualties. But then you look beyond that. You start thinking about, all right, not so much how this affects Blue Origin, but how does it affect the known that we have, which is the upcoming SpaceX IPO. Now that NASA really has only one private contractor, because that's pretty much where they're at right now, I think that propels the SpaceX IPO even higher than possible. You could get a sell to news piece that comes off of this. I was looking at the private market, and I wish I could share this with you. Maybe I can share it with you on my phone. That's probably the best I'm going to be able to do here. Yes. So take a look at this. Let's shut this off for a sec. You see that? That's the SpaceX private market. And it was down 1.68%. But look at the move that it's made. When you look at what's happened from the end of the year, all right, to where we are now, right? And that's $128.87. Now, I'm not saying that this is going to be a price that's close to the IPO. We don't know where the IPO is going to be, but that's the private market. And the private market has done very well, up 200% so far in the last year. So I believe that as we get closer to the IPO day, we might see something much, much greater. So, I talked about last week getting in early. I talked about last week creating income. I talked about trading signals. I talked about a lot of this. I also talked about Virgin Galactic, and I want to add with stocks and ETFs. So let's talk about each here and spend a few minutes. I'm going to just do a quick rewind, but I really want to get to the stocks and ETFs portion because I got some questions, and one of them had to do with Virgin Galactic, but I had others saying, what stocks and ETFs can I follow right now before the SpaceX IPO? Going to get to that. So let's dive right in. Getting in early, I mentioned there were a couple different brokers out there that were getting access to the IPO shares. I've had a lot of controversy about this. I've heard folks say Robinhood's not getting any. I've heard Charles Schwab's not getting it. SoFi is not getting it. Listen, folks, until we get into next week, I don't think you're going to see, I don't think you're going to see anything there. I think these brokers launched these around the same time or maybe a little bit before the roadshow happens, where they start going out and really pumping up this IPO. But this is what I've learned. Fidelity, Charles Schwab, Robinhood, SoFi are among the few that are going to be getting this for their retail customers. So each brokerage is going to have its own rules. Each broker is going to have its own eligibility, all right? And they might even be tier-based, all right, which means that you may have been a customer of theirs for quite some time. I don't think you can sign up for Charles Schwab or one of these brokers, maybe other than Robinhood, and immediately get access to the IPO. I don't know, right? I got a couple of these brokers. I'm going to be looking more into this as we get closer to IPO day. There's going to be supply and demand constraints. I remember what was it? The IPO that I talked about, Figma. I remember Figma, and Figma, you were asking for 1,000 shares. You're lucky if you got one. So there are demand constraints, and there's going to be demand constraints that are going to be on this SpaceX IPO. The timeline looks like this, right? You expect the roadshow to happen sometime early next week, but by June 11th or June 12th, the stock is expected to begin active trading. So one of the things I want to do is I want to get into the IPO. I don't know what I'm going to end up getting. Who knows? But all of us have the same ability here that we didn't used to have as retail traders. Now, the options should begin trading about a week after. And if we're looking at that, and I'm definitely looking at that, I got a couple of ideas up my sleeve with these options trades. But one of them is based on what I end up getting for the IPO. The options trade June 19th, expected maybe a day before, maybe a day after. Volatility should be ultra high when these options come out. I want to sell premium into the options debut. And how? One of the easiest ways you could do this is with the stock you currently have, or stock you would be getting, which is covered call trading. Now, for those of you that don't know what a covered call is, and I'm giving you very glossed over pieces of this, it's basically a foundational option strategy. I call it a level 1 option strategy. You sell a call option against shares of stock you already own. It's popular. Brokers like it because it's one of the least riskiest trades to a broker, right? They also see it as a low risk trade to you as their client. And it's used to bring income in on a stock portfolio, especially if the stock stays flat or even goes up a little bit. Now, there are several options to explore with covered calls. And what do I mean by options? I mean strike prices. I mean expiration dates, right? But basically, it looks like this. For every 100 shares of stock you own, you sell one option contract, right? And with SpaceX, I'm going to be looking above the market price to sell out of the money call options. You get immediate cash payout, but in exchange for that, you're agreeing to sell your 100 shares of stock at the locked-in strike price. So if I use Apple as an example, because I can't use SpaceX, can't use that for a few weeks, but here's a chart of Apple. And as you can see, stock chart on the upper left-hand corner. My option chain is down here, and this would be the area where I would go in and look to find a call option to sell against 100 shares of stock. As I do that, my details will show both the stock that I own or that I purchase and the call option that I'm selling against the stock. And your risk graph is going to be such that it looks very much like a risk graph of a stock, but it caps itself to the upside because you're bringing income in. So it offers you a higher probability than just outright owning the stock itself, but that high probability comes with the risk that the stock could get carried away. There are 3 outcomes on a covered call, right? Number 1, stock finishes above the strike price. If that's the case, your stock's getting called away, but it's also the maximum profit potential you can take on this type of trade. Now, the second thing is the stock can stay flat, which means it would be right below the strike price. You're keeping your shares and you're keeping the premium that you got when you sold the call options against the shares. And number 3, the stock could drop. So this would provide a small cushion, although stock's going to drop, and overall, you may see a negative change in your portfolio, but you would have seen it anyway if you were just hanging on to the stock itself. All right. So those are the outcomes that we see on the covered call itself. Why trade covered calls in the first place? Well, the main benefit is income generation. There's downside protection. You've got that premium that acts like the synthetic, and it lowers the cost of the stock. The main trade-off is capped upside. And then here's the big question. What if I don't get the stock? Then I'm going to tell you right now, consider cash secured or naked puts in place of stock. I'm going to do a video on that next week, or I'll do it live here. All right, we'll do a live section. Actually, you know what I'm going to do? I want to wait until the actual options come out, because then and only then I'll be looking at those put options, at selling those puts and selling them wherever that IPO price originally was. So that's the plan that I want to do as I'm looking forward into that. Now, I mentioned stocks. I mentioned different stocks with space stocks. Let me show you what I did. I took some space stocks and I put them together. First of all, I created a PDF file. I'm going to figure out how to get this PDF file to all of you in the comments section. Where is my PDF file? There it is right there. So here's my publicly traded stocks and ETFs on a PDF. And that shows Rocket Lab, Lunar, which is Intuitive Machines, Redwire Corp, Momentous, Fly, which is Firefly Aerospace, ASTS, that's AST Mobile Space or Space Mobile. Then there's Planet Labs, Viasat, Black Sky, SpaceX is upcoming, UFO, which is Procure Space. And then we've got some ETFs. We got ARC Space Exploration, that's ARC-X, Team of Space Innovators, which is NASA, and ROKT, which is the SPDR Final Frontiers. Now, I show you that because what I did was I took every single one of these and I put it into a dashboard. All right, I want to show you the dashboard. By the way, I also want to show you what Virgin Galactic's been doing. It's been actually on a tear. Take a look at this. All right, this is just the last couple of weeks. We broke above that 320 resistance area. And as of Friday afternoon, $7.82. This thing is just gone to the moon. I'm going to tell you right now, the probability is it's going to crash just as hard when people figure out that this is not a space exploration company. It is a transport company for humans. They haven't actually launched in a year now. And they're losing money hand over fist. To me, it's not a business. It's a hobby. It's a meme trader's delight. And there's going to be some selling opportunities here, taking the other side of this one. But it's likely to continue higher here over the next week until the SpaceX IPO. So what about those stocks I talked about? Well, I've got them right here. So I put them into a list. And let me go find that list real quick. So in my lists, there they are, space stocks, right there. So in my space stocks list, I'm going to click on that real quick. I've got all of those loaded up. I'm going to go ahead and select that list. And now what I can do is I can look at this and I can see what is actually going on here, right? What's going on with my space stocks? And here's what's going on with them. Today, you got them dropping with the exception of MNTS. Everything else is down quite a bit today. And you could take a look and see, well, what's changed? What's got the worst move? RDW, Redwire. It's got the worst move down. If I click on these, this will immediately take me into the stock itself, which is what I want to show you what's happened. So Redwire has also benefited. All right. Black Sky. All right. Another one benefited until the last couple of days. Moving along here, where's ARC-X? Here's the ARC-X ETF. From the 19th, it's gone from 33 to 37. So it actually had about a 10%, a little bit more than 10% move up before pulling back. All of these are benefiting in one way or another, or have benefited in one way or another from the upcoming SpaceX IPO. I wanted to share those with you. And like I said before, I will take the PDF file I have. I will put that in a link, and I will share that with all of you that are hanging out with me here, both on the live presentation and for those of you that happen to be catching this on demand or the recording. All right. So anyway, that's it for me for today. I hope you enjoyed it. Hope you guys got some education out of this one, as well as a little bit of entertainment. Again, come and follow me online, patternsandprofits.com. We got plenty of different reports out there. You could check us out here on the YouTube channel. Again, subscribe, hit that notification bell, and you can get all of our videos and all of our live streams immediately upon being launched. One more thing, like this if you found it something useful to yourself. And I'll see you here again, same time, same channel next week. Bye, everyone.